Welcome to Trade Live with IG. It's myself, Rich McDonald, and the glamorous.
Hey mate, how you doing?
What's your name? Can you introduce yourself?
Piers Buckworth. Hello everyone. Again, happy Tuesday.
You're looking well.
I'm on good form today, mate. We've got lots of
Got
off the back end of a very volatile, very volatile week last week, wasn't it? I mean, listen, it's just a great time to be learning about markets if that's what you're doing for the first time, and some really healthy things going on, some strange things going on. Quite frankly, all the things that have been going on, you and I have been talking about for months now, right? Most of the things anyway.
It all came to a head on Thursday, didn't it? Thursday afternoon and evening. Whew. My P&L was not looking.
No, I mean it all came. But that's kind of how it works. You know, that moment of max pain. I sent out this video, my evening brief to my community. I think it was last Thursday night, where I just said, this is the point. A picture of my book that said, this is the point of max pain.
Yeah.
And if you've been doing this for long enough, you know that feeling where, and just to use the two greatest examples from what we've been talking about and what's been going on in my book, you just look at Oracle and Micron, for example, right? But you've got to be careful. Trading is trading. You get stopped out, you get stopped out.
Well, this was the big problem. I think I tried to get involved in Bitcoin on Thursday.
Can't wait. I'd love to know your rationale behind that one at some point.
Well, the fundamentals, it has a great dividend yield.
Worth, I've got no idea.
I'm in it for the technicals. But it was fascinating the way that played out, because it wasn't even violent.
No,
it was down.
It's just sneaky, right?
Down 13%, and no
one even really blinked an eyelid, quite frankly.
Well, there was a lot of people blinking eyelids, I think. But
yeah, but you know what I mean.
I was blinking a few times.
It's been quite an aggressive deleveraging, that's for sure.
If we just have a look at that, the way it came off ever since the 28th of January, when we
get that screen up, because I can't see anything.
89,000. Yeah, guys, Terence and Cam in the studio today. Producer Phil off on his holidays. But yeah, if we can get Piers' screen, that would be great. And he can see the destruction of those P&Ls from the 28th of January dipping down. And a real, the lowest I saw it was 62,000. I actually hadn't realized that it had touched 60,000 there in the early hours, midnight.
Question is, what happens now? Does that mean, I don't ask me, because I can't tell you, I can't tell you where it's trading on, can you tell me? Can you tell me where that's trading on and where it should be trading in Europe and without the technicals?
That's interesting. Yeah. So how would I explain, why do I think that it's...
Yeah. Why do you think it's not going to 10,000, for example?
Yeah.
And it's a genuine question.
So the difference, let's say the difference from when we were last at 10,000, right, or even at 30,000. The changes in the regulation. Obviously, you've got U.S. government in theory backing it. You don't have the SEC blocking it.
Yeah.
But the number of people that are now available to buy it through these pension funds, through these ETFs, and to me, it's now been accepted as part of asset allocation.
Yeah, no, I completely agree with that. And you know what? I think that is if someone put a gun to my head and said, explain how you would value or justify Bitcoin. And bearing in mind, listen, I don't have anything against it at all. And I tried, and I want to believe in it. But what you just said is the argument, right? It's the institutional adoption, and then the bulls would argue that this is now an institutional asset class, and as such need to have a certain percentage of global assets, and therefore, I forget the exact numbers, that if you put it up against gold or another major macro product or asset, it needs to have a certain allocation.
And even gold doesn't have the allocation that it potentially could. If it did, then the theory is that it would be at 8,900, right? That's the fair value for gold if it was held in portfolios the way that it should be.
Yeah, and of course it wasn't only 6 months ago that Jeffrey Gundlach sat on CNBC and told the world that institutional fund managers not only were underweight gold, but most of them didn't even have any.
Yeah.
And actually, quite frankly, that was actually quite, if you look at that interview, and I mean, it was probably a bit of a coincidence, but that was a huge moment in terms of yet another big upside whoosh for gold. But yeah, listen, the whole subject is interesting. There's been obviously a lot of pain taken because it's not just retail, right? This is institutional. There's a lot of very smart people. Tom Lee is one that that stands out to me as a very smart guy. I used to work with him at JP Morgan. I followed his career. I followed his work on markets. He's a massive Bitcoin bull. You know, he was saying when we were at 125, whatever it was, not that long ago, he was saying we're going to 250 in 2025. And, you know, and it's, so this is as you just said, this is an institutional thing. This is not some retail, you know, pipe dream. This is a real thing. But I still struggle with what happens next. I mean, can you tell me how much leverage has been taken out of the system?
Well, that's the question, isn't it?
Yeah.
Let's touch on that. The reason for everything. Right. Now, I saw a great argument saying that, let me see if I can find it actually, because it was really useful, just describing exactly the reasons that went into the sell-off last week, and it was Hartnett. And Hartnett was saying,
Good on.
one of your favourite guys, go and explain who he is while I find it.
Michael Hartnett. I mean, listen, the guy's he's an old salty dog, and I've got a lot of respect for him. He's been working in investment banks for a long time, but I mean, listen, he's been calling the market down since 2022, the third quarter of 2022. So he's been, you know, and obviously he gets away with it because he does this thing called the bull bear indicator, in which he does a lot of technical stuff. But ultimately, if you sat in a room with him and said, what do you think of the market for the last 3.5 years in a row, he would have told you that it was too high and it needed to sell off. So he's called it very, very badly. And then, of course, he jumps in and says things like, I think it was only 6 months ago he came out after being very bearish and said, this tech bubble's got a lot further to go, which of course was the moment when when tech just went
boom.
I mean, listen, he and Mike Wilson are wonderful contra indicators. Yeah. So I always laugh when I hear his name because it's just.
Well, so this was his call a matter of weeks ago, that the bull and bear indicators hit an extreme contrarian sell signal, rising from 8.5 to 9 to 9.6. Now, the call itself was driven by record low fund manager position in cash. So that was at 3.2%. So they're 96.8% invested in assets, 3% in cash. Strong global breadth, which had improved so much. And then tech and high yield inflows. So Hartnett said he did not recommend selling a couple of weeks ago.
So hang on, this was how long ago?
2 weeks ago.
Bearing in mind, 4 days ago, he said, time to sell.
Well, and so this was, he argued that this time it was different.
Yeah,
this was back in late January. But of course, then we saw this contagion unwind, let's say, which of course was driven by software. So software was the main hit, then crypto, then silver, largest crash on record, multi-strategies degrossing, stress in the basis trade.
Yeah.
And then obviously the Mag 7 and hyperscalers. So it was systematic style contagion after 1 year of there not being such a thing.
I mean, listen, okay, I just reiterate, I mean, he's got a great brain, and he's been working in investment banks for 4 years.
It's not so much his opinion. That was fact, right? That's exactly what happened last week.
Fair enough, and that was exactly what happened last week.
Is it done?
But listen, I think that this is a road bump in pockets of the market that kind of needed to have a road bump. But if you take a step back from the market and you look at it, global equity market, let's just start from the top. The macro, as much as we might be, as much as there's many people that are trying to create noise about us having a spike in inflation, and we may well get that at some point, and the Fed independence and all this and blah, blah, blah. The bottom line is that we have a Goldilocks environment with high growth, very high growth. The GDP nowcast is 5.8%, for God's sake. It's ridiculous.
It's been brought down to 4.2 now.
4.2? Okay, sorry, this is the latest number.
That's still gangbusters.
The point being is that a 4.2 for the GDP nowcast, and for those of you who don't know what GDP nowcast is, it's a GDP forecasting instrument number that comes out of the US. It does shop around a bit. As Rich just pointed out, it was 5.8 only 3 weeks ago. Now it's 4.2. Anything above 3 for an economy the size of America is a big clip of growth.
Well, you say that, but Trump has just said that Kevin Warsh can generate 15% growth.
Okay, but, well, I mean, Yeah, okay. And he also thinks that Kevin Walsh is going to cut rates to 1%, but that's not going to happen either. So the bottom line is that forget what Trump's saying, because quite frankly, what he says is just painful. But what's happening is that the macro is in good shape. Cash on the sidelines is still big, but it's less than it was before.
Yep.
We've seen leverage taken out of some critical parts of the market that needed that to happen. I could argue that there's more of it needs to happen.
If you had leverage this time last week, chances are, if you were going to get stopped out, you've been stopped out.
Correct. Absolutely correct. Listen, if you were leveraged in silver, I think you got completely cleaned out. That was a 50% drawdown. 50% in 4 trading days. How beautiful. That was the most dramatic because that was the most dramatically overbought, right? Second to that, Bitcoin. That was not as dramatically overbought and crowded into, amazingly, as silver, and it's a bit more of it's a bigger thing. And
probably different holders as well.
Different holders, a whole different kettle of fish, but it's still leverage, right? And that's been sucked out slowly over the last, God knows how many months it's been going on for now. The thing is that look at the broader indexes, look at the big Dow constituents, look at the big FTSE constituents, right? These are not leveraged parts of the market. These are just long-only, old-school things that are going on. Now, are they crowded? I think you could probably argue that UK banks, just because UK banks don't have enough liquidity, right? The global money pool is too much money chasing too few stocks, as ever. So when the global money pool has shifted into value and shifted into FTSE and the UK banks, that's great, but there's only so much buying that there can be done, right? And then it becomes a little bit of like Barclays today was a good example of kind of traveled and arrived, good numbers. Stock was down 3 or 4%, stand chart, the rest of the banking space. It's great. I mean, I'm sure that story's not over, but it's becoming a little bit overcooked in the value space. So my only question is, listen, I've got no doubt that software's oversold and some small caps.
Hang on, your only question, let's get this for the tapes. What is your only question?
My only question is how much longer can the equal weight S&P go up for without us having some form of catalyst to cause a correction in the broader market?
Right.
So I'm not talking about pockets of the market. I'm talking about the actual market.
So what you're talking about, all the popular things selling off, right? Palantir was another example, Oracle, some of Mag 7 like Amazon, all those things selling off. At any point in the last year, if you had told me some of the moves in the past week, well, I'd say, oh, the market's down 8% then. Yeah, no, it's not. It's heading towards all-time highs, isn't it?
If the market is fine, and it's been this way. And this is the beautiful rotational machine that is the U.S. market. It rotates and it sucks bits out of the exuberant parts and puts them elsewhere, and around and around and around we go, until such point that there is, and it takes a catalyst. It could be a black swan event of some kind. So the Chinese are talking about dumping treasuries. It's very noisy. Who knows whether that will turn into something. Something like the way I can listen, we might get. The thing is with macro data is it can't just be one print, right? Because the market will look through it and it could look through 2 of them. You might need 3 really offside prints to be able to convince the market that we were at a macro turning point.
Yeah.
So that's that. Kevin Walsh, as I mentioned a few times, is a fantastic Fed pick. So I can't imagine he's going to be doing anything stupid. And so then what does that leave us? That leaves us with these sort of like tail risk kind of scenarios. So it's very hard to see how we have a meaningful sell-off, but we kind of need one, right? When was the last? I don't count April, even though April was on a standard deviation basis was one of the most aggressive sell-offs.
I think I'd count that.
It was, but it was self-inflicted and self-fixed.
So a natural
one that's out of the. Donald Trump had the market on a string. Does that count? I'm talking about something that's out of control of any policymaker or politician in the world. Yeah. That remains elusive.
Right, well, let's turn to the one thing that sets us apart from CNBC, apart from peers, of course, being better looking than Jim Cramer. It is the portfolio. Yes, we run a 100,000 portfolio. I'll tell you what, it wasn't £100,000 on Thursday at one point. There it is. A majority of the positions are still in there. So we have Microsoft. Remember, we bought some Microsoft.
Please tell me we have Oracle in there.
I purchased a second.
Well, look, we made good money on Oracle.
Sorry, calm down. A second tranche of Microsoft. So we are now almost break even. But of course, when Microsoft was down at 404, it wasn't looking very pretty. So I sold a 420 call against it. right? So I'm actually losing $400 mark to market on that, as you can see on the right-hand side. But we are long 60 shares of Microsoft, and we are short calls on 100 shares. So that's something that we've got to consider, because the stock now trading 417, and of course we go short at 420. However, there's that premium of $12. So it's already priced in. Microsoft will get to 432. Then the thing that saved us, oh yes, yesterday was a beautiful day. You see, we bought Oracle at 149. That was live on the show last week. We then, or I then, I should say, bought more Oracle when we came off air. So I doubled the position, and that was at 147.5. Might have been just as before we came off air, actually. So we got 150 Oracle. That looked shocking on Thursday. I was not enjoying that at all, but we had faith. We had
I'm so happy you stuck with it,
conviction
mate.
in the call. So we got 150 shares of Oracle, now giving us a profit of $1,600. That Palantir put also looked absolutely shocking on Thursday. We were down $5,000 in that alone. So I had to try and save that position, right? And I saved it by selling calls at the 175 level, and then I sold calls at the 160 level. So that just offset our deltas a little bit and meant that when we were losing a lot in the short puts position, we were making, I think, 2,400 in the short calls. So that helped. That softened the blow there. Market was looking crap, so I sold some calls in the S&P 500. So if 7,500 were short in the S&P, 29,000 NASDAQ, same thing. And then last but not least, we are long Uber. We bought that live on the show last week as well. You see 150 on air, and then another 150 that night. And we're small up there. We're only up 1% basically in that. And then this is a new thing we haven't looked at before, but I needed some insurance. This VIX index, that is, of course, volatility. So I bought calls on the VIX going above 24. So we would be long vol if it went above 24, all the way up to 32. And I just thought that was worth having as a bit of insurance policy. And that's that.
There we go.
So we've escaped. We're down. Sorry, if you can just pop it up back up, guys. We're now down £700 on the funds of 99. So we've taken a 1% loss, and we're down another 70 basis points. So not great, but considering where this was, we were probably down 5% on the portfolio on Thursday. Then, well, probably actually more at one point. We're down 6% at one point. I'd take this. I'd take it and kind of feel like we got away with it.
Yeah, I think so. Net, it's quite disappointing, isn't it? But I just...
Well, considering that we've completely wrong in Micron, we're completely wrong in PayPal.
Well, hang on a sec. We're actually not completely wrong in Micron. We just got stopped out.
Well, and that is the horrible truth of the matter. Is let's go on to Micron.
Micron was trading at $455 a share. It's now trading at $375, and it's down again.
And we got stopped out at 440. Here's
378. It's trading at now.
We got stopped out here.
Yeah.
And look at that.
That is just so brutal. That's trading for you there, guys, right? I mean, literally, I've got a few of these on the go. Oracle and Micron will stick out. And SanDisk as well, by the way. I got stopped out of SanDisk, and then I had to re-enter it. And that then subsequently fell 20%.
And where is it now?
Well, it was it traded at $6.99. Right?
Okay.
That's where it got to.
What on earth has PayPal done since we looked last week?
PayPal, I know that you want to
pretend
like it doesn't exist, but I went through the S&P, and the only other one, I need to do a screening, to be fair, guys. We did it as a group task in my community to find out who could find a company in the S&P that's trading on a forward earnings multiple less than PayPal. Ford Motor is at 6.9, so that's fine. PayPal is trading on 7.3 times forward earnings. Now, I'm sorry. If their earnings had collapsed, then that would make the fact that they're trading on an RSI of 12, which makes them also the most oversold company in the S&P by a mile. I just don't understand what's going on. What is going on? Someone explain to me what's going on. The earnings have not collapsed. The revenue, I mean, the balance sheet's fine. They've just been hired by OpenAI to do their ecosystem. What's going on? I don't know what's going on.
What are the analysts saying?
They've all down. They just follow each other lower, right?
Right.
But it's become a bit of a listen. Most of the analysts have downgraded their numbers. The best anyone can come up with is like a neutral at about 40, 42. But again, all they're doing is what they normally do. They don't have a clue. They're just following the price action and adjusting their price targets accordingly. I think we just have to wait for something to happen. But again, I'm going to lean into the RSI. 12 point. Actually, it's probably changed a bit. It's probably 13 and a half.
Well, I'd say it'll have gone up now, yeah, because it's not. It hasn't continued lower. This is a great question from Maturin. Thank you for this, Maturin. We got stopped out, right? Does that mean that we got it wrong in the timing, the entry, or taking the trade in the first place?
It's a great question. Losing money and getting stopped out by definition means you got it wrong, right? As a trader, I think if you're trying to apply
you got something wrong.
You got something wrong. But listen, you can be wrong. Some people in the world of trading and investing claim that they're going to be, people like Michael Burry, for example, he'll claim to be right if in 2.5 years' time his call on Palantir and Nvidia works, and in the meantime he'll have some complex option strategy. Everyone else gets cleaned out, but he'll be right. In my opinion, that is not right. That's wrong. As traders, your time frame is a lot less. Listen, at the moment, I'm kind of neutral in terms of whether I got Micron right or wrong, right? I stopped out, I then re-entered, I made some money, stopped out, I've chopped around, and the stock is kind of just like stuck in neutral now. If the stock, so it's a nuanced answer to that question, but I think that the only way you can really quantify that is, do you end up making money from the trade or not? And over what time frame, I suppose.
Yeah. Well, then another good example is exactly what OW6937 asks on the chat there. And that is, what do I think of the gold miners? Because, of course, I entered the gold miner trade last Tuesday, was it? I paid 100 or 100, just over 100, 101. So it was Tuesday morning. And saw it get above where we paid for it and then it sold off. And look how aggressive it had sold off. It got down to below $90. So I got stopped out of that one. I think I got stopped out at 94. And again, you feel great when you see it down at 90, but now it's trading 102 back to where we bought it. And this is the difference from my trading and my longer term account. So my ISA, my SIP, I don't stop myself out in that, right? Either the story's the same and I continue to hold it, or go bigger, buy more, or the story's different and I sell it. Well, but that's not a stop, that's the story changing.
Exactly right, and that's the point. And that is the key differentiator between trading and investing. If you're investing and you believe in the story, nothing's changed in the story, in your view, you average down on it, or if you're short, you average up in it. But if you see a structural change in the story, you exit the position regardless of where you're trading at that point in time. Versus is a completely different thing to trading. And I think that it needs to be defined more often than it is.
Yeah.
Because based on the conversations that I have back and forth in my social media world, a lot of retail people claim to be investors and or traders, but they're crossing over and confusing the two quite significantly, I think.
Yeah.
So if you're jumping onto a highly speculative company for a 20% gain in a week is not investing.
Yeah, that's rolling the dice.
I'm not an investor at all. I mean, my brain is an investor. I've got a deeply fundamental brain, but my instincts and my personality is much more suited to trading. In fact, if you used my ideas and just took them away and put them in a long only book, you'd probably make a lot more money than I do trading.
If you've got a deeply fundamental brain, what's your heart? Is that deep as well?
Deep down, I'm shallow.
Right, we've got 5 minutes left to the open then. What are we looking at this morning? We've talked about, the UK. So basically, to catch up on the UK, BP stopped their buyback. So they're waiting for the new CEO to come in. The interim CEO has decided enough, the buyback. We're going to use that money to pay down debt. That stock's down 3.5%. You mentioned Barclays, that was decent numbers there. AstraZeneca also had numbers. How boring is this? Down 0.3% on numbers. That's what you want from
big
a drug
mover,
company.
right?
Yeah.
They're the entire. I mean, it's the FTSE. Connor is asking lots of questions today about nuclear.
Yeah, nuclear and uranium.
I mean, the nuclear story is fascinating because we're going through under the Trump administration. There's a whole bunch of these companies coming to market. I won't talk about them today, the ones that are not public.
There's another couple of months still to go.
A couple of months to go, and we've got a couple of very exciting companies coming to market who have got their the green light from the SEC. But the one that is, it's all about these small modular reactors, right? OKLO is obviously the most famous listed name. Shrinking down the technology and cleaning it up, in many cases making it disposable. I've done a lot of research on this subject, and it's fascinating, and there's going to be lots of exciting trades to make. OKLO have some competition coming their way.
Sorry, making uranium disposable.
No, the SMR,
Tried that in Chernobyl,
the SMRs themselves.
Ah, right, okay.
So these new, for example, there's one of these companies that's coming to market. They put the SMR a mile underground, and by definition, it doesn't get maintenance a mile underground. It has a 2-year lifespan. It self-cleans, self-regulates.
Oh, wow.
And at the end of that time, it's shut down, and they concrete the hole and do another hole.
Talking about self-cleaning, you are on a detox at the moment, aren't you?
Yeah, I'm just doing a fasting for 3 days before I'm flying to New York on Friday, and I've been eating too much food, so I'm just doing a full cleanse.
How's that going?
It's going well. I'm feeling a little bit.
I was going to say you almost fainted in Waitrose earlier.
Yeah, I feel a little bit. No, it's fine. I mean, for God's sake, I'm only on day 1, but it's good. It cleanses. It's good. It's a great way you get those ketones kicking in, mate.
Is that right? Is it? Okay.
Yeah.
Let's see.
You wouldn't know. You got your chocolate bar.
This time tomorrow, we'll see if see how
we're going. This time tomorrow. Exactly. Yeah.
Right, so yeah, two minutes till the open. What have we got to look at today? Novo had a big rally, didn't it?
I mean, we need to talk about all these names, right? I mean, again, Novo. Thank God, Novo actually traded quite well, right? Bought it around 300 Danish kroner, doubled up at 387, sold it at 345, pre-numbers. Then we had this incredible sell-off on the back of their sales guidance, which was 14% lower. And then on top of that, 24 hours later, we got this big mess with hims and hers, and essentially hims and hers who think that they can write their own rules with regard to selling drugs to the public.
Yeah.
They did that big Super Bowl ad last year where they said, "Don't trust the government and the big pharmaceutical companies. Come and buy all your drugs from us." And they were a big meme stock and retail favorite. The other day, they claimed that they were copycatting the Wegovy pill, and that they'd managed to I forget the exact terminology for it being absorbed in the gut correctly. But the FDA came out within minutes and said the stock was up 20% pre-market. Since that moment, it's down about 50%.
This pop.
This is hims and hers, right? No, but pre-market, you won't see the pre-market on that. It was up 20% pre-market. It was up to.
Yeah, this will be it on Thursday last week.
There we go. Yeah.
Yeah.
So, a fascinating story. Obviously, Novo were the big winners. Novo have also launched a lawsuit against them. Listen, don't forget that Novo's on 13 times earnings, and they are a big proper company with $27 billion worth of cash.
Are you like them at the moment?
I'm long. I remain long. I sold a clip. I traded a clip and I kept one clip. So I'm very much long that. And the other one that's in my book, which is Diageo.
We'll come to that in a minute because we are racing to the US Open live here on Trade Live. And we've got
oh my God, look at Oracle, by the way.
Ringing of the New York bell. Do we know these people? Is that anyone?
I've never heard of them in my life, those people.
So there we go. That is off and running. Let's see.
Oracle.
It is Piers' favorite stock on the downside. Where's it gone? Micron's just jumped, actually. Micron down 1%. But we haven't talked about this big winner, Spotify, up 13%.
That would be on numbers then, right?
Be careful on that because there's a wide spread there. Never trade something $8 wide.
No.
On the open, but that is obviously very volatile there. Oracle up again. Come on, up 2% there. Netflix up 2. That's really going to help.
That's good news.
We're still short those 80 puts. So that's going to help the P&L first thing. That might take us nearer to flat.
By the way, sorry, and we need to talk about Netflix. I just sent this a second ago. This has probably got something to do with the fact that Paramount have just sweetened the deal again. Those who think Paramount are out of this race. So Paramount enhances its $30 per share all-cash offer for Warner Brothers Discovery to include a 25 cents per share ticking fee for each quarter in transaction that it has not closed between the 31st of December, between the 31st of December 2026. Paramount continues to make progress in its regulatory clearance process. On February the 9th, 2026, Paramount Skydance Corporation certified that it has compiled with the DOJ on the 23rd of 2025. Second request for information, blah, blah, blah. Paramount are still in this fight, which a lot of people have written off. And you know what? I would not be surprised if that's got a lot to do with this Netflix move.
Yeah, oh, it definitely will.
Because, and if anyone wants to know, we've talked about this community, what the market wants in terms of this deal, the market does not want Netflix to do this deal.
Netflix will be up 15% if
I think it'll be like taking your foot off its neck, right?
Right. So Netflix, but is it not a win-win situation? It's so much priced in to Netflix now that they are going to win this deal. Netflix at 83. What's the downside if the deal is done? If they get it, then
if Netflix get the deal,
yeah.
Well,
it's not going to go sub 80.
Sorry, I'm just trading, guys. Just bear with me one second. Well, listen, if Netflix gets the first of all, it's so complicated, and if Netflix win the deal, they're still going to have to get the regulatory approval, which I can't see happening. We've already heard what they've all got to say about that.
So there must be a great options trade.
Also, there's just an overwhelming feeling inside of me of look at who Paramount are.
There's that deep heart.
There's that heart coming through, shining through. Well, no, this has nothing to do with my heart. This is just my brain. Donald Trump and his pals want to buy Warner Brothers Discovery. I would imagine mainly because they get their hands on CNN, and it seems to be very obvious to me that they're going to pay any price for it.
We just got Stu asking what's Rich enjoying for his lunch at 6.
Loves it. That's Rich's
chalk bar and a Coke.
Breakfast of champions, mate.
That's worrying. That
Oracle, just keep whispering it. PayPal, by the way, is. Please tell me we've still got some of this thing, mate.
No, absolutely
Why not?
I don't think it's even worth mentioning anymore.
Well, that's why I'll do the stocks. You do the options trading.
Right, so Palantir up 1% at 144. We're going to come on to Palantir in a minute because I've got an interesting fact for you. We're going to do some math work on that. Get your calculators out. We've got Walt Disney at 108. That's up 1% as well. Then Amex, what else? Broadcom, bit boring, 345. Microsoft up 1% at 417. It's a good day. Where's
Roblox trading? We can talk about that after the break if you want, mate.
Is Zane starting to Roblox or something?
Listen, we've got an audience who care about these stocks.
Right, Micron down 3%. Well, maybe that's the problem. Alphabet down 1.2.
Deary me. Tech is heavy again. I've got to admit, I like that. What I love so much about this is that we've got QQQ heavy, and by the way, that's the open. Anything could happen. QQQ heavy. And then the beaten up tech stocks, all very green. So that's the book. That's how we like it. When I say the book, we don't have PayPal in your book.
No.
Our book. It's meant to be our book, Maverick.
Thank you, Goose.
I gave you Maverick there, by the way. So very kindly.
That is very kind.
Nice.
Now, speaking of which, let's have a look at exactly where that leaves us on the futures. We are flat market. It's pretty good after yesterday because yesterday it got pumped. Nasdaq trading 25,270. The S&P trading 6971. So are we going to touch that 7,000 before the end of the week? I think that's almost inevitable.
Yeah, well,
we're going to close above there.
You're obsessed with that 700, aren't you?
7,000.
7,000 rather. I don't know. I mean, yeah, I just think it's all a bit boring. At that level of the index, I think there's lots of interesting stock situations going on.
FTSE 100 is boring. That's down 20 basis points because of those big heavyweights not really producing the numbers. And then we've got volatility now at 19. 19's probably about a fair price for it, isn't it?
That's, I think we're yeah. So 19 is the new 14.
Yeah, yeah. Can't with Trump, you will never get a 16 vol again.
No, but do you remember when we were at 12
Yeah,
for like ages?
2018.
Yeah.
Yeah,
Correct.
Spot gold 5,070. When we've got silver trading nigh on. Now, how is this vol for silver, right? We're used to seeing 16% days now in silver, and it's trading down 70. That means vol is getting crushed in silver, and maybe gold and silver starting to behave themselves there, and we'll see a little bit of P&L come back into the book. Because I didn't talk about it, we are still short the $75 puts and the 110 calls and the 100 calls additionally as well.
So uber hedged in the silver department.
Yeah, well, this.
Are you telling me that you? I mean, when this is meant to be our book, it's basically your book. What is the
My money, your ideas.
Yeah, okay. But I don't know whether my ideas are actually in there though. I mean, they are, but I'm
Oracle.
certainly not. Yeah, no. Okay, fair enough. But silver is just anyone's guess right now, isn't it? Do you think it's going to go back higher again, meaningfully?
Yeah, but there is so.
No, I mean that strategy there is quite covered. I'm just a separate question.
So I think it trades between 75 and 100. I don't think anybody's going to give me a prize for that, but they will give me money.
That's a good point, mate. And there we go, guys. And there's a piece of learning for you right there. What have we got going on here?
Right, Palantir.
You need to buy some, mate. It's chronically oversold.
I want to give you a bit of a maths challenge on Palantir. Now, those of you that watched the show before Apex, Piers used to actually come on and just have a friendly chat. But back in the day, him and I were absolutely seething that this stock, Palantir, was trading at above 100 times sales, right? 110.
Here we go. Here's the conversation, yeah.
So Palantir, 110 times sales. What does that mean?
130
Just
times sales.
You take the 2025 revenues, and to get to the market cap, so the market cap at the time was about 300, maybe a touch above 300 billion. You take that 300 billion, you divide it by what the revenue number was, and that gives you price to sales, right? And that's a ratio, and the ratio was about 100 times. So it was going to take 100 years of those revenues to get you, if you bought one share, it's going to take you 100 years to get that back in terms of revenues. Palantir dropped to $125 last week. Piers Buckworth. Now that we've moved a year on, right, and we're looking at 2026 revenue guidance, and the price has dropped from $200 to $125, what did the price to sales get down to last week at 125? Cam, can we do a poll for the audience?
So the question is, having come from 125 times sales at over $220 a share down to where we got to the low, which was $125 a share.
So the question is, Terence is just going to type up a poll for the audience. At $125, what price to sales ratio did Palantir drop to? Remembering, at its highs, it was 110 times.
Well, it actually was higher than that, but yeah. Oh, forward. You talking about forward?
Price to sales.
Yeah. Price to sales, we got up to 135, trailing.
Right. On a forward guidance. So we're looking at forward guidance 2026. So this year, Palantir's sales, what price did it get to? Price to sales ratio. And the answers are, we start off low. 40, 50, 60, or 70. 40, 50, 60, or 70.
It's a fascinating question, and it's great to be able to have this discussion live over the space of the months that we've talked about it. to see where, and those of you who are following this particular story closely, to see where on a forward basis, where a company like this starts to become stomachable, if at all, after a sell-off. So we'll wait for the results to come in and then give you the answer.
We'll come back to that. Right, we have, it's 10 minutes past, 10 minutes into the market. Let's have a quick check just to see how everything is panning out. Spotify still continues to trade up 15%. Netflix up 2, Disney up 1.7, and Tesla trading back to 420. It always trades at some point back to Elon's big funding secured price, doesn't it? Good. We're going to take a 1 minute break, literally, or give us 90 seconds. Piers can fill up his water bottle for his big detox, and we'll be back in 90 seconds. See you then. I told him, I said, you've got 90 seconds, right? So he ran off, he's gone to the loo, and now he's gone to get a coffee. So give him a round of applause, everybody, when he actually makes it back in. So we're talking about Palantir. We're talking about what their sales ratio dropped to, of course. Couldn't believe it when it was at above 100 times sales. That just meant this thing is absolutely ridiculously overvalued. But as the year goes on, you go from 2025 full year numbers into 2026. So, of course, they're looking ahead. They've got another 3 quarters of 2026 to go. So they give you a guidance. What is that guidance going to be for the full year? That's 60% above what last year's was. So you've already got a 60% improvement in the sales number. Oh, thanks, mate. Cheers for joining us, yeah? Timer. I thought you were on a detox. How are you having a coffee?
Coffees, there's no food, mate.
Yeah, but caffeine, you can't have caffeine in a...
You can. You so can.
In a
These are my rules.
I think Jesus might have something to do with that, because he was the original one who fasted, wasn't he? And, do you think he was having coffee?
Probably, mate. That's the other thing.
So 60% increase in your sales, and then of course the price has dropped from 200 to 125.
Right. What are the answers we've been given here?
We've got
48%, relatively overwhelming. No one went for 40. How many people voted on this, by the way?
We've got 30 votes so far.
Okay.
So let's give that a little bit more time.
It's a fascinating question, actually. It's without doubt the most interesting question we've asked anyone so far.
All right, what do you think? So it was at 110.
You keep saying that. It was on 135. Love saying 110.
Intraday.
It's on 110. So it got from... Okay, so bearing in mind, we're talking about a forward basis, guys, which always lowers it a little bit. So I think it got down to 49 maximum. Let's call it 50. I think it got down to 50 times forward sales at its very lowest point, based on the 68% revenue growth and the guidance.
Let's go back to the chart here, right? You remember Palantir ramped into results back in October, and then the results came out, and on the day it jumped from $203 after hours. It got up to 220, and then poof, Alex Karp was not that great in the conference call, and it's just never got close since then. It got close to 200, but at this stage it was above 110 times, above 110. With this sell-off down to right at the bottom at $125, Piers Buckworth thinks it traded on 50 times sales. The crowd, the viewers, think, the majority, that it traded... What's the answer, guys? 45% of you think it traded at 60 times sales. So where would you buy it? Right? Now, you're not a fan of Palantir, but there's a price for everything.
No, listen,
at this stage,
I respect the fact. Listen, it's one of the only companies I've ever seen in my 2 decades of looking at companies that has this much free cash flow whilst it's growing this fast, right? And that is what makes them, in the professional world, live in a different category.
Okay, so what price to sales would you actually buy this at?
As I told you, okay, let me tell you exactly what I think that I would pay for this stock right now, based on the long term. These guys have to end up at 15 times sales, 30% revenue growth when they get more mature. Okay, so let's be generous and call it 30 times sales. Let's be really generous and say I'd pay 40 times sales for it.
At what point do they have to get down to 50? Right, guys, this is the question on every single stock, right? Whether it's price to sales or price to earnings or price to book.
Yeah.
This is every question you should be asking before you buy something.
Yeah, correct. If you're an investor, this is what you have to ask yourself.
In what year should this thing be trading at 15 times sales? This is right at the start of its life.
But this is but it's not though. I mean, this is the point. This is the problem I have with Palantir. The amount of growth that they have to achieve is so far. Listen, there is not a single mature company that's trading on more than 15 times sales. And even when you get 15 times sales, by the way, is ludicrously expensive, by the way. Like anything more than 10 is expensive, very expensive. Quite frankly, all the software players who used to be charging 40 times sales. 40 times sales was a lot.
Yeah.
Those guys are still growing at 30%. So
let's answer the question. What year should these be trading at 50? 3 years or 5 years?
5 years.
Right, so in 5 years' time, this has to be at 15 times sales for you to be comfortable.
Even as long as they're growing at 30%.
Yeah.
Yeah.
Last week on Thursday, this got down to 41 times sales.
Wow, there we go.
Already 41 times sales at $125.
Yeah, but that, again, That's beautiful, and that's right at the top end of what I'd be willing to pay for it. But that's with 68% revenue growth. They're not going to have 68% revenue growth for the next 5 years. They're going to have like 45, 50.
Okay, so let's say it's 50, just because my head will actually be able to do that math. That means that your price to sales ratio for 2027 is going to come down to 20 times.
And that's much, much, much more stomachable numbers.
But that means you're at 20 times at the end of 2027, and you're telling me in 4 or 5 years it's got to be at 15 times. I mean, it's cheap.
If they keep growing at the pace that you're suggesting, yeah.
And that's why you say 30%, because if it's 30% and not 50, then
listen, their revenue growth, there is not a single company in history that's ever, when it's become mature, their revenue growth will get down to the low 20s. That's where they'll be in 5 years' time. And I'm being generous with all my numbers. In 5 years' time, this company will be growing, if it's lucky, in the low 20s.
But every company in the world wants to bring Palantir into their...
Yeah, some do, some don't, and they've got competition and technology's changing. I listen.
But that's what I'm saying. They're going to go from, you know, killing people for America to actually being involved...
Killing people for companies.
to being involved in, you know, anybody from Nike to AstraZeneca to...
Listen, I can tell by your tone, and listen, it's just a hard one. I think Palantir is a fantastic company, and they're not called the Messi of AI for no reason. Someone came up with that because they are the best in the business, apparently, and it's hard to argue with it. I'm just saying that I've seen they're a software company at the end of the day, and I know software companies very well. In fact, that's probably what I know best, and they never, ever, ever keep growing more than 30%.
I just think it's really interesting that we were so bearish on this at 200 to 210. Now, I put up my hands at 125.
Yeah, but you think it should be? I think it should be at 80. You think it should be at 125. I think the stock is still it's still the most expensive large cap in the world by miles. And
80 is harsh.
Is it? Not if you think they're going to end up growing at 20%, which I think they will. But listen, the here and now is that what Rich has said about them being, I can't say the words, cheap, is... Listen, if you have this...
Not anymore. That's why they've bounced so aggressively.
This is my point. So they've literally bounced 3 days. So,
but that's why you should have bids in there. You should go into your IG system, have a bid in there at 125 in case.
Hang on a sec. Why the hell do you want to be involved in a company that is cheap on one day and expensive 3 days later?
Because that means you've made money. What are you talking about?
We're having a real conversation.
Sorry, why do you want to buy something low and sell it high?
If you want to trade a company that in your mind can be cheap one day and expensive 3 days later... You mean it's too volatile? We are in the wrong... No, I mean that you want at least 50% between those two outcomes. If not 10%.
No, I'm not saying it's expensive now. I'm saying it's neutral. At $150, it's...
If it bounces another... Okay, listen, we're talking about two separate things. You're talking about very short-term trading, and I'm talking about the big picture of this company.
It doesn't really matter how long you look at it, right? If it's trading at 125, I like it. If it's trading at 180, I'd short it.
Yeah. All right, cool. Well, listen, if it sells off again, I'll have a crack at it.
So what do you want to talk about? Do you want to talk about
Roblox quickly?
DRAM or Roblox? Jeez, of all the things.
Listen, I just want to mention it because it's been a lot of people asking me questions about it.
Right, I know nothing about this apart from I was babysitting somebody once and they played this. What do I need to know?
Right, so Roblox, it's a fact. Listen, this was one of the top metaverse companies. They're a game developer, cutting-edge game developer. If you go into a teenage kid's living room, if they're allowed to play video games, they're all obsessed with this stuff. It's essentially it's a virtual community, a virtual economy, and it's a way for anyone who's playing it or using it to build their own games. Now, listen, it's a long way away from anything I care about, but I just know the company very well. They're a very good company.
GTA for kids.
They generate a lot of free cash flow. Their revenue growth is 45%. There are 9 times sales with
Revenue growth when? 5 years ago?
revenue growth year on year is 46%.
Forwards?
Yeah. The revenue growth that we've just seen for last year has been 46%.
What's it this year? 5?
36% is for next year. They have free cash flow, I just said, no debt. And listen, it's a long way away from some amazing thing. I just wanted to point it out because the trade back to 100, the trade back to 8, if you want to apply the same rationale that you just applied to Palantir, the trade back to 80 is a layup. Anyway, I just wanted to mention it.
Smart Score is looking a bit ugly. Let's see what that's on. Insiders selling shares, crowd wisdom very negative. I mean, that's just all momentum stuff, really. That's not great. The average analyst target is 110. So, and this is just what I do every time. I've never looked at a stock before, never traded a stock. Have a look at what the analysts have got to say. And yes, Goldman's agree with you. It's not often that you agree with Goldman's.
Nope. It's scary, actually.
Citi agree with you. It's going to 119. It's going to 140. Why have they been so terrible?
Because lots of different reasons. One is they're a bet on the metaverse, which died a painful death. Just ask Meta.
Yeah.
They have. They don't make a profit. In fact, just to focus right there, they continue to lose money.
Oh, it's not great considering they've been one of the biggest games for children.
No, they're a speculative company. I'm just pointing them out because they're a trade. That's it. We can move on.
Right. Anybody who has what is it, 8 to 15-year-olds or something?
Yeah, I'm not quite there yet.
Anybody who's got an 8 to 15-year-old, ask them, does your kid still play Roblox? Do their friends at school still play Roblox? Let's soon find out, because sometimes that's the best research you can actually do. It's certainly, when I noticed the turnaround in Marks and Spencer's back in 2003, it was because my granny told me that the seasonal wear was very good in Marks and Spencer that year. Made 40% out of that.
It's just such a... You love that kind of stuff, don't you? The on-site market research. Love it.
Neil Brewster saying Roblox died because of the adverse PR with age checking.
Yeah, well, that's going on in Australia at the moment as well. Listen, it's just a trading situation.
Acknowledge, Neil.
Well done, Neil Brewster.
And yeah, they're not doing anything to protect the kids. Right, so...
PayPal. 4 letters.
What is PayPal?
You missed out, mate. On so far, you've missed out on since we spoke about it. Since we spoke about it last week, where you said to me, "Throw it in the bin." It's up 5% since that moment. So
only you could look at a chart like this and tell me I've missed it.
I'm talking about from when we started again last week. It's free money. Was it just 12?
I'd say I've got plenty of time to get back in if I want.
Not according to your Palantir rationale.
Right, let us know any questions that you've got for us. Golden Kiwis, Mr. Harry is saying, have pushed Marks and Spencer price up. I'd say I haven't. Sharpie's saying is 11-year-old boy still plays Roblox. And now tell us, where are you off to next week? I am going to be without you next week, am I?
Yeah, so I'm going to New York on Friday morning. I'm going to be doing various things in New York, including catching up with some Apex members. If that's anyone, by the way, anyone who's actually watching from Apex, I'll be in New York next week. And going to the New York office and doing some work from there. Listen, I'm going to try and call. We'll see if we can line up so I can do a call in for the show. Perhaps. My dad has booked to take me and my son and my nephew skiing for 2 days. So I'm going to be working the entire time. That's what the beauty of a thing called a mobile phone. But it's going to be so, and I might do an off-piste video call, or an on-piste video call, for that matter. Either way, we'll try and.
As long as it's not après-ski, I don't mind.
Yeah, that wouldn't be up your alley at all, would it? No, it's not going to be much après-ski with my dad and my 7-year-old. But Yeah, so that's going to be.
He's too busy playing Roblox.
We'll see whether we can hash together a video call. But yeah, I'll be doing it in New York next week.
Is your boy a big computer player?
No, not over my dead body. Not allowed to watch. He's not allowed to have video games.
Good.
There's no way he's going to spend his life going on a video game. It's just not happening.
He just on a trading platform instead.
Come out, let's go and play cricket, pal. No, he doesn't. He likes what he watches. He'd like to if it was up to him. Just I can't get my head around it.
Yeah.
Off-piste.
Right. So we will have a guest in on Tuesday and Wednesday next week. Be sure to join us. Just in case you forget, make sure you subscribe to the YouTube and feel free to give us a like as well if you'd enjoyed Piers' rambling today and my maths challenges. And basically, Carol Vorderman. IG's Carol Vorderman.
That is the most horrible thing you've ever said to me.
No, not you. I am.
Oh, yeah. Okay, fine. Okay, no comment.
Right, good stuff. We'll see you, but we'll be back tomorrow. Don't forget.
Thank you so much for everyone for cheering in. Apex, I love you. Everyone else, love you. Let's try and build the momentum behind this show because it is fun. Get to talk about markets with my old mate. We both love it very much, and we love it when you tune in. Thank you.
And we might actually start a bit earlier tomorrow because it's non-farm payroll day. So we're going to start as close to 1:30 as we can, maybe like 1:40 or something, just so we can have a look at the non-farms, get our.
Can I just say that's one of the best things you've said. Us digesting the numbers as they come live, especially when that bloody annoying screen you show me when I can't even see. It's much easier if we figure out especially the line items, because it's not just the headlines, as you well know. It's U6 versus U3 and all the nuances. Then we can come on and say something helpful. All right, I'll give you 1:45. We'll see you at 1:45 p.m. tomorrow, and then next week, yes, Piers will be pieced if we can get up to phone in. Peace. You guys, thank you very much for tuning in.